Good morning, everyone. It's Henry on the live stream. I appreciate you all for tuning in. I hope everyone can hear me or can see my screen very clearly. If you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So, in today's live stream, we're going to start by talking about the US dollar index. So, before we proceed, please, if you cannot hear me or cannot see my screen very clearly, please indicate so that I can have that fixed before we commence. So, thank you so much for your confirmation. So looking at the US dollar index, like I've always stated, my bearishness on the dollar, which ranges from the 12-month time frame, still being within this range low and range high, which in my opinion is bearish. So I wouldn't really be surprised to see anything facilitates the market to continue to the downside on the US dollar. So it can be a high impact news or it can be from market structure. Anything can actually happen that could potentially send price to the downside. And that is the reason why I am bullish on the foreign currencies, bullish on assets as well, ranging from cryptos, the stock market, NASDAQ, the S&P 500. The reason I'm bullish on them is because overall market structure on the 12-month time frame on the dollar is bearish. So 1 second, sorry. So the reason I'm bullish on them is because the overall market structure on the 12-month time frame on the dollar is bearish. So that means that anything can actually happen. It could be a high impact news driver, or it can come from market structure, and it could swiftly shift price to go from bullish to bearish on the intraday levels. That is why looking at the euro, Aussie, Bitcoin, Ethereum, and all sorts of them, I'm bullish on all of them because the overall market structure on dollar is bearish. So that being said, as you can see, if we go to the daily time frame, you can also see on the daily time frame yesterday, I was talking about my analysis on the dollar, and I was talking about the key levels that I'm watching on the dollar. Right here, we have this extreme premium zone, the extreme premium zone right here. I talked about it yesterday, and I said if we were going to see a sell-off on the dollar, I would anticipate for that to happen from the extreme premium zone. This is a very significant key level where the institutions are going to be looking for sell positions in order for the dollar to continue trending to the downside. And that being said, if you also scale down to the 4-hour time frame, you can also see yesterday I talked about this high resistance liquidity as well being a key level that price will find it so difficult to rally above this key level. And if this key level right here, if this key level right here fails, this will be the next line of defense. And if this key level fails to act as a resistance, this one fails and we rally above this key level, then it means that we are very bullish on the dollar and will potentially run this low resistance liquidity right here. So that was my analysis yesterday, and as you can see very nicely, price came very close to that high, to the high resistance liquidity, came very close to that high, and then rejected off that key level. And then the next thing we saw was a displacement to the downside. So if we are bearish on the dollar, the next thing I would like to see would be for a potential continuation to the downside to run this high resistance liquidity. So you can see how these high resistance liquidities are acting as strong support, strong resistance zone. Right here, this one acted as a strong support and then rejected price the first time. We still came back, rejected it again the second time. But you have to take note that the more price comes into a high resistance liquidity, the weaker that area becomes. So as this area has been mitigated the first time, the second time, if the market should for any reason come down close to that position again for the third time, I wouldn't be surprised to see it run below this low, because number one, look, we still have an inefficiency resting below it as well, and I wouldn't really be surprised to see price come down to mitigate this inefficiency and run this sell side liquidity. Because if we're bullish, then I wouldn't really want to see this low get taken if we're bullish. But if we're bearish, then this will be an easy target. And also look right here, we'll have this low resistance liquidity resting right here as well, so which is another target for me. If we're bearish, that would be the first target where I would like to see the market smash through that key level and then potentially run this low right here. So if we run this low, that means we're potentially bearish on the intraday levels on the dollar, because this low right here, this is a 4-hour low and this is a 4-hour high. So if we run this low, breaking below this low, I would see that as a 4-hour shift in market structure to the downside, and then potentially be looking for opportunities for the dollar to continue trending to the downside. If we go to the daily time frame as well, you can still see that this low is still also a significant low, but overall on daily, for me to ascertain that we are now completely bearish on the dollar, this low is what I would like to see the market come down to run this low, because anything can happen from here. Price can come down here, mitigate this extreme discount and continue higher. That is 100% possible, because we're still within the range low and range high on the daily time frame, which means anything can happen. Price can decide to run this low and then continue higher. But until we run this overall daily low, anything can happen within this range. So for us to be completely bearish on the dollar, we want to see a displacement to the downside to potentially run this sell side liquidity. So that is what I'm watching on the dollar. And if you do have any questions based on that, feel free to drop it in the chat. So we're going to look at the other foreign currencies. We're going to look at Euro, look at Aussie, and see what the market is doing so far on the foreign currencies. So for Aussie, as you can see, yesterday I was talking about my analysis on Aussie, and I said I'm bullish on Aussie. I still want to see it gravitate to the upside. And so far you can see how the Aussie has reacted very nicely after mitigating our extreme discount zone. On the 4-hour time frame, you can see that key level right there. Aussie came into that position, took liquidity, sell side liquidity, and after that, market structure shift in smaller time frame. So on the 15 minutes time frame, you can see right there was a market structure shift, high, low, and then a break of structure. So on Monday, I basically put out a trade about this buy setup, but unfortunately, I trailed my stop loss to have the risk really early. So price reversed and then took me out and still continued higher. But if I didn't trail the stop loss to have the risk early, which would have still been in this trade, and it would have been a very, very phenomenal trade. It would have been up 10% on this trade, if not more than that. So, but eventually I just trailed my stop loss to break even way too soon, sooner than I usually do, but it's all part of trading. Sometimes we make mistakes, sometimes we make wins, but at the end of the day, we just stick to our bias. Our bias on Euro, our bias on Aussie remains the same. So 1 second, pardon me, as I'm having some difficulties with my computer this morning. So I'm just trying to make sure everything is all set up, and for some reason it's just having some slight issues this morning. I don't know why that is happening. Okay, perfect. So perfect. So everything is working perfectly well now. So now looking at Aussie, as you can see so far, Aussie. After this break of structure, we saw a retest, and then price had this range. I still try to buy it again from a 30 minutes time frame break of structure perspective, because we have this was the overall, this was the major 30 minutes break of structure. I tried to buy it from this key level as well. If we go to yeah, so this was the chart where I still tried to buy it again, because I knew that this key level is still going to be another accumulation. This last down close candle, price came in there and I still took a buy from here. We got into a buy, price rallied to the upside, eventually reversed, took our stop losses, and then eventually it literally just took our stop losses. It didn't even close below the low. It just took the stop losses, and the next thing it just reversed and exploded to the upside, which means the bias is correct. The only thing was the fact that there was a lot of manipulation due to the CPI numbers. What I should have done was to still look for another entry even after it took us out, because it still showed another entry. My entry model still was present right here after running the stop, but it was just that because we've already taken that first and second loss, I just didn't feel like taking another trade. But usually with my concept, it doesn't really matter. The first one price can run your stop in the first one, and then the second one and third one, it eventually works. And you can see if I stuck to it and entered this trade for the third and the fourth time, we would have been a massive profit of like 25% in total, because after this was the key level, so this was the high, the low, and then the break of structure. We got in the first position from here. It rallied, reversed, took our stop losses, and then you can see right here, created another high, another low, broke structure, came back for a retest. Right here, you can see the retest. So we would have still used here as our first entry, stop loss right here. And then second entry, we wait inside this range, high, low, break of structure. This will be the second entry right here. Stop loss just a few pips below here. And we will still would have been in another two positions on this one. But eventually, I didn't really get into the trade anymore. I just felt maybe price wants to come lower or something. But for future references, if the trade doesn't work, as long as the bias remains the same, I'm just going to look for another entry again. And even if it doesn't work, I'll still just look for another entry, because eventually you can see that if I had stuck to my guns and said, I am going to take this trade again, as long as I see my concept, my model presents itself, I'll just take it again. Even if it's a loss, I'll just take it again. So if I had done that, we would have been in this trade right now, and it would have been a massive profit of like, first entry would have been a 1:12, second entry would have been a 1:13, which would have been a total of 25%, which would have been incredible. But that being said, we move on to the future, looking for what the market is going to do so far. So now, judging from the current price action, you can see that the market is already showing us new structures, and now we have new structural high, and then this new structural low as well. And then right here is our break of structure to the upside. Now we're looking for potential areas that the market is going to come back into for a continuation to the upside, because we still remain bullish on Aussie dollar. And right here, we have this inefficiency resting right here. We don't know which part of this inefficiency price is going to mitigate before a potential continuation to the upside. So all we're going to do, we wait for a 30 minutes break of structure to the upside within this inefficiency. If we see a 30 minutes break of structure to the upside, we'll be looking for a buy setup for this to continue to the upside. Remember, today is Thursday. It's almost the end of the week. So any trade we're getting into is going to be a potential continuation of what Monday, Tuesday, Wednesday is showing us. We're not going to try to trade a reversal. There's no potential reversal to be traded right here. And right here, you can see we already have a high, a low, and now we're watching to see where the price is going to break this structure. Once we see a break of structure on 30 minutes time frame, we'll be looking for a potential retest. And then first entry, we're going to use the last down close candle as our first entry. Second entry, we're going to wait for a 4-minute shift of market structure within this range. So for now, the first thing we're waiting for is to see this 30 minutes high get broken. And once that happens, then we'll be looking for an entry and also a re-entry as well. So basically, my strategy is just looking for one entry and then a re-entry, same trade, 2 entries. So that being said, as you can see, it's forming very nicely, and hopefully we can see an expansion on Aussie to break this high. And if we do eventually get into a buy on this, our next draw on liquidity is going to be this key level right here, this inefficiency on the weekly time frame. And after that, the next drawn liquidity is going to be this low resistance liquidities resting at this highs. I really want to see price gravitate above this high, smashing through this highs. So if I get into a buy, my first target will be here. My second target will be right here. So that is what I'm watching on Aussie dollar. If you do have any questions based off my analysis on Aussie, feel free to drop in the chat. The next one we're going to be looking at is Euro US dollar. So for Euro US dollar, we tried to buy Euro US dollar, but unfortunately price went straight to our stop loss and then reversed on the trade. So this was the trade. This was the trade setup, and you can see how this was our entry, our stop loss right here. You can see how price literally took our stop loss, and then the next thing we saw was a huge spike. It surged to the upside. So personally, let's go back to another chart. So personally, I still remain bullish on Euro US dollar. I still want to see it continue to the upside, like I've always stated. And right here we'll have a 4-hour high, 4-hour low, and then we have a break of structure on the 4-hour time frame resting right here. So the next thing I'm anticipating to see would be for price to retest the key level and then potentially continue to the upside. So let's look at 8-hour time frame. On the 8-hour time frame, the only thing I can see right here is this inefficiency as well. And if we outline this inefficiency, because we can't really pinpoint the exact place price will react from, so within this key level, we'll be looking to see a 30-minute break of structure. So far, price created a high, created a low. We've not really seen a break of structure and close. So right here, it wicked above the high, but it didn't close above it. So we'll be waiting and watching to see a break above a 30 minutes high. Personally, I'll prefer to buy Aussie than to buy Euro. Euro price action lately has just really not been the best, because even the structure right here, after we took that sell side liquidity, as you can see, this was the sell side liquidity. After Euro took this sell side liquidity, then if we go to 15 minutes time frame to see the break of structure, this is the high, this is the low, this is the break of structure, and then the market structure doesn't look clean enough for me to put any risk on it, irrespective of the fact that, as you can see, this was the break and then price retested the highs right here and then expanded higher. Personally, I wouldn't really have gotten into this trade because I really don't like the structure, what it's looking like, and it's just it just doesn't look like a great setup in my opinion. But it eventually played out a 1:6 risk to reward ratio, which is still awesome. But in my opinion, I'd rather put my risk on Aussie dollar than to put it on Euro, because Aussie dollar has a better price action, but Euro doesn't. So we'll look at USD card. Personally, like I've always said, I don't like the structure in USD card. You can see how it came to this weekly open, displaced to the downside. Look at what we came into, inefficiency. So this inefficiency could also act as support zone to continue to take it to the upside, or potentially it could act as support to take it to the upside to mitigate this last up move right here and then potentially continue lower. But personally, I'm not going to try to sell it. I'm also not going to try to buy it because I don't like the price action for USD card. But I'll be watching it very closely. If there's any commentaries, I'm still going to share with you all. So let's have a brief look on GBP/JPY. So my analysis on GBP/JPY still remains the same. I'm watching it closely and I'm not going to try to buy it because price is already overextended and is currently at my distribution zone. What do I mean by distribution zone? Now looking at British pound, Japanese yen, the overall structure on 3-month time frame will have a lower high and a lower low. So the overall structure, in my opinion, is bearish. So if we look at it on the 6-month time frame, we can see that very clearly. Lower high, lower low. So price is still within that range, high and low. And anything can happen within this range and price could potentially continue lower because the structure on the 6-month time frame is looking bearish. That's my opinion. Now, it doesn't mean it's going to continue going to the downside, but for me to be bullish overall on British pound, Japanese yen, I would like to see this high get taken and then price close above it significantly. Once I see that, that is when I'm going to be bullish on this particular pair, and then I'll continue to look for a buy. For now, I'm not looking for a buy on it. I'm just watching it closely. If I do see a displacement to the downside and price breaking below a daily low, then I'll be bearish and I'll be looking for a potential retest and then sell this. So that is the only thing I'll be much more interested in seeing for British pound, Japanese yen. And if I don't see that, I'm just gonna have to be on the sidelines on this one until I see a significant break above this high and close, which is gonna take time. It could take years for that to happen, but for it to break down to the downside, breaking daily structure, it doesn't need to take a lot of time. It can happen next week, next month, 2 months from now. I don't know, but it can happen anytime. So that is my analysis on British pound, Japanese yen. For US oil, I talked about US oil, my bullishness when price was coming down here. But eventually price didn't really show me what I wanted to see for us to look for a buy. I wanted to see at least a 30-minute shift of market structure to the upside. But eventually this is the high and this is the low, really very high and distant from each other. The high and the low is very distant from each other, and if you measure from the high to the low, that's about 6.28%, which is a lot. My opinion is really a lot. I would expect it to really be something just high, low, break, then look for a retest just like this. But it didn't show that, so we're working with what we see, and what we see is this significant high get broken. The next thing I'm doing is to watch this key level, the last down close candle, before breaking structure. If for any reason price retests this zone, whenever that is, and I see a 5-minute break of structure to the upside, I'll be looking for a buy on US oil to potentially continue to the upside. So that is my analysis on crude oil, and if you do have any questions, feel free to drop it in the chat. The next one we're going to be looking at is gold. For gold has really been in a very long consolidation, and so far I really want to look for a buy on gold, but I cannot buy it from this range. For me to look for a buy on gold, I will want to see price come down into this position. And the reason we're seeing all this back and forth movement is because we have this high resistance liquidity, so it's very difficult for price to gravitate below this high resistance liquidity to run out that stop losses resting right there. So but I'm watching it. If eventually we do see price dunk below it, running stops, and then I see a 5-minute shift to market structure to the upside from here, then I'll look for a buy for gold to continue higher. But until then, I'm going to be on the sidelines for gold. That is my analysis, and if you do have any questions, feel free to drop it in the chat. In the next live stream, we're going to look at the cryptos, look at Ethereum, Bitcoin, see what they're doing, and also go through the trade idea that was shared with our members this morning on Ethereum. So I appreciate you all for tuning in, and I'll talk to you all in the next live stream. Have an amazing day, everyone.